Alright, boys, it's go time. I hope everybody is doing well. Welcome back to another stream. It's kind of last minute, but I wanted to do sort of like a weekly recap of what I saw in the market, and some patterns. And hold on, actually, I want to make sure all this is good. Okay. All right. I think, yeah, no, it should be good. All right. All right, boys. Let's take a look at today's market, or this week's market, from Monday all the way going into Friday, right? So a couple things to note is, as soon as market opened on Monday, creating both a market structure shift but also leaving a new week opening gap that did not get traded back into on NQ at all throughout the rest of the week, while ES tapped into it here, and then traded back, once more, while Dow was also traded back into it multiple times. It even consolidated in it, not far into it. I wouldn't even say past the 50%, but a lot more so than NQ, because NQ just simply drove away from it. But a couple things to note is that the market opened, created a market structure shift, and then continued to trade higher and higher. Monday going into Tuesday, there was sequential SMT. I believe, right? Or was, no, there wasn't, not Monday, Tuesday, but I think there was for a daily cycle right here, which also propelled, which actually was the mechanism for which price kept continuing. Because if you look here on Dow, when you take London and New York session, you have sequential SMT, a daily cycle, right? Daily cycle, sequential SMT, and then you also have doubling theory, sequential SMT right here on the daily cycle. So you have a daily cycle doubling theory, sequential SMT as well. So it looked like this. Right? Because you have Q1 failing to trade, or Q3 of the weekly cycle failing to trade below Q1, while in Dow you have it, and then also ES failing to do so as well. Which actually, this is high probability, because this sequence is very high probability, because Dow, when it's the leading divergent asset, meaning it's the only asset that is showing contrary price action relative to NQ and ES, that's higher probability than if NQ or ES were to turtle soup, or it was basically any other sequence. Which also makes this a, well, actually this would be considered a true daily cycle doubling theory. Sequential SMT. If you wanted to get like super technical, that's what this is. Reason it's a true sequential SMT is because of the fact that Dow was the only asset to Turtle Soup while these didn't, so that makes it even a higher probability sequence. And that's just Monday. That was, and then also you have the PSP precision candle at 10 a.m., which actually was a continuation precision candle. It printed bullish, indicating higher price action as well. What else do we see here? Okay, that's just for Monday. Market opened, or not opened, 9 o'clock opened, traded a little lower, created the failure sequence, and then just continued higher. Going into Tuesday, what do we see? Tuesday it created the low of the day at 4, which is in the London session. So Q2 of Q2. Q2 of Q2 candle. Create at 4 o'clock. So the low of the day was created here, probably from no, it doesn't look like there was sequential SMT necessarily, but it was already trading below the true week open, and it was trading below the true day open when this was formed. So it was trading below the true day, it was trading below the true week, and what else? We see that there was also this right here. So we have a yeah, so there's that. There's the same candle right here. And then there's this one. So we have SMT fill because this gap got completely filled while this one barely got traded into, and then this one just got traded about just past 50%. There's that. And what else? How would you have known this is the low? I would say from the fair value gap, you have the SMT fill sequence. It looks like this candle did trade below all the lows, so it didn't create. I don't think it. Maybe on a lower time frame, it created sequential SMT, like maybe on the micro cycle, possibly, or 90-minute cycle. But traded higher. Market opened with a precision, or 9 o'clock opened with a PSP. So it opened, and then you have the 10 o'clock candle trading into the opening price. 11 o'clock trade a little bit lower, and then just consolidate. So the Tuesday was a rough day to trade. I didn't trade Tuesday, but it was a very rough day, because if you were trading like, let's say 9 or 10 o'clock and you were going long, you would have had to get in literally at the opening of the 9 o'clock candle or at the very low of the 10 o'clock, because if you were going short at all, you were just getting stopped out. So there was no short that were available in this pocket, in this area of fragmentation at the time. There was just the shorts were not going to play out in your favor. And if you were going long, you had to get in super low or had a super wide stop because price consolidated. And then going into the PM session, it expanded. Something to note about this is that although low probability, one of the things to note is that if during the New York session, if you don't have a lot of especially this, like the 8, 9, and these three candles don't expand, or if New York just barely expand, like basically just consolidates, you can expect PM to a lot of times exert the liquidity that was being withheld, which is what you see here. What else? So yeah, you could have treated this like a breaker, and then just look to go in long in the 50%. Like try to just treat it as like a premium discount thing, where you're only willing to sell above it and buy below it. And if you were to do that, you'd still be safe if you bought below the 50%, anywhere below it really. And then just put your stop wherever you feel comfortable. Trade higher. Going into Wednesday. And 10 o'clock didn't really offer a whole lot either. I think this was what is NFP, or was it FOMC, or the 2 o'clock news driver. So if you were to have held either positions going into it, you were going to get completely wrecked because it took both sides of liquidity. Very, 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 very aggressive news release taking both sides of liquidity. So basically, if you were in positions anywhere within this range and your stop, you didn't have a wide stop, you were going to get stopped out. Longs. Over some confirmations for longs. Was there sequential SMT on the weekly cycle? Yes, there was. Although not super high probability, there was actually sequential SMT on the weekly cycle. There was no closures, so it wasn't super high probability, right? It wasn't super high probability because without the closures, it's usually not going to be as long of a lasting move if there is one. And usually there is going to be, whenever there's sequential SMT, you always have somewhat of an expansion or somewhat of a move. So just give me 1 second, guys. I need to do something real quick. 1 sec. Okay, and then sorry, back to what I was saying. Sequential SMT is only made high probability when there's closures, but you always still have a move with wicks. There'll always still be something, right? So I'm gonna I'll annotate it. Sequential SMT, right? Boom. This price trades into this order block. Okay, so we have this order block being traded back into this down close precision candle before tries. So you have that. What else? You have the weekly cycle sequential SMT. You also have a crack in correlations with the true opens because you have the true week open not being traded into on the news release. So let me try to show you. So when price trades down, it doesn't break past the true week open, while on ES you're trading way below the true week open, and then also on Dow you were trading below the true week open as well, right? So cracking correlation, that makes it high probability as well, a high probability failure sequence in price, failure swing sequence. Price trades up, and that's about it. That's the only trade that in my opinion was viable on Wednesday, was long on the 2 p.m. candle. If I'm being completely honest with you, that's, and then also you have it trading into this fair value gap as well. All right, so there's that. But yeah, that's me personally, that's the only trade long, pretty much going into this candle right here. That's all I could see. I mean, other beside that, because you could have waited for confirmation. Once you see the sequential SMT, once you take everything into consideration, going into the 3 o'clock, which is already super late, but technically you could have treated this wick as a breaker, at least going into the 3 o'clock. It's like the last hour you want to get caught trading, like, which is, but even then, that being said, once you have the sequential SMT and once you have the crack correlation with the true week open, you can now treat this candle as a high probability breaker, or the wick, and then look to take entries inside of this, hopefully past the 50% if possible, which it does break past it a little bit, but, and then price trades up more and then ends the trading day with creating actually sequential SMT, right? So going into Thursday, you have this candle, which broke all of these highs. While this one did not. So it's not sequential SMT necessarily, although I guess it with Q3, I guess it would be a daily cycle, right? Because it would be, yeah, it created a day, so it created a lower time frame sequential SMT, which creates a lot of liquidity. So essentially, what's being stored here is, now there's a lot of liquidity above this because it created a lower time frame sequential SMT, right? A daily cycle. So going into Thursday, you're aware that now there's a daily cycle sequential SMT in play. But you also know there's magneto effect here, right? You have magneto liquidity. Technically, this is a market structure shift as well. So you have a market structure shift, but in layman's terms, easier to understand, basically more or less what you have is a weekly cycle sequential SMT, which is going to be used as liquidity. How do you know this is going to be used as liquidity? We wait for another sequential SMT up here. We wait to see if price were to attack the low first or the high first, which it attacked the high first. So you have price trading higher and higher from Thursday market open. You have price trade open and then start trading up and up, attacking, once again attacking all the highs or trend line liquidity, the trend line liquidity that's built here. You now have a PSP at 11 p.m. forming here, taking the highs out, right? So it traded up, created a PSP. What else? Now we have a weekly cycle sequential SMT in play. Right, so then you had daily cycle, and now you have a weekly cycle. Okay, so you have a weekly cycle sequential SMT with a PSP. So that model in itself is very, 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 very high probability. What else makes it high probability? Oh, oops, I meant to grab this one. Let's put it right here. What else makes this high probability, right? So you have a two-stage sequential SMT essentially. But it actually becomes a three-stage because why? You have a lower time frame sequential SMT also forming Q1 and then Q2, right? Because here oh wait, no, sorry, my apologies. I was back testing this earlier and I'm trying to remember the sequence that I found, but anyway, let's go back to this. So we had the daily cycle being taken out by a weekly cycle sequential SMT. So now with the PSP, you know that this is going to be used as liquidity, right? Why else would we say that this is a higher probability sequential SMT than this one? Couple reasons. This sequential SMT was formed without closures, without a 1 hour closure. This one was. But the only difference is that it doesn't look like it because it didn't trade above, it did close above this high, but what really more important is it closed above all these highs right here, right? So this candle, I don't want to confuse you guys, so I'll start taking some of this off. But with this candle closing above all of these highs, what do we know that as? Hidden sequential SMT, right? Or weekly cycle. Hidden sequential SMT, correct? All right, so, because that's actually exactly what it is, weekly cycle, hidden sequential SMT, because you have the closure not happening above. Really, it's, yeah, right. So weekly cycle sequential SMT. What else? We also had the daily cycle being taken out. So 2-stage sequential SMT. Also, we have, I don't think there was a lower time frame. Maybe there was Q3. I thought there was a daily. Pretty sure there was a daily sequential SMT in here too. Yeah, there was right here. This was lower probability because of how out of sync Dow was. But with this candle right here, there was sequential, a lower time frame sequential SMT, which is confirmation for price to trade even lower. But my focus is on this area in price because this is where actually the highest probabilities entries were. Once price trades down, we have a breakaway gap here. We have a breakaway gap here. And we have a breakaway gap here. Meaning price created the gap, and then price never traded back into it. Obviously, Dow ended up coming and closing above and creating another correlation. But that's actually how powerful this model is. Even though the time frame in which it happened was not convenient, because this PSP was formed once again in the Asia session. This fair value gap was formed in the London session, and price consolidated basically up into New York session, leaving it at 8, which isn't convenient, which isn't even a good trading block anyway until 9 and 10, which things get a little choppy from there. But knowing that this sequence in price played out during the earlier sessions probably is an indication that New York is going to not be as high probability. But at least you know where price is headed. And if you were to wait till 9 o'clock or 10 o'clock to trade, 9 o'clock does go under the true week open. Technically, right? Price is underneath the true week open here on NQ. It also is on ES, and it also is on Dow. Why isn't this a high probability sequence in price, though? Meaning, why didn't price trade higher? Well, because we had the PSP weekly cycle sequential SMT, and so this is just a market structure shift. That's literally all it is. We don't have sequential SMT. Price is trading at this point underneath all irrelevant lows. So no sequential SMT. It's not a PSP. The only thing that it does do is trade underneath the true week open. But the only reason it's trading underneath the true week open is because it's going to target it again, not because it's going to leave it and not return. So creates not a turtle soup, but a market structure shift underneath the true week open. Trades, obviously consolidates, trades higher. The 10 o'clock trades back into this fair value gap, which is also a new day opening gap. Right? So we have a fair value gap that's overlining with a new day opening gap. What else? We have once the 9 o'clock already trades into it, you know that this is an imbalance. Price trades back into it. and then trades lower for the rest of the market day. Basically consolidates, drops lower, and then at 4 p.m. it comes back. Something to note is that this was not high probability day at all, like not even a little bit. The only effective trade, which was technically a trade, but it would have taken 1, 2, 3, 4, 5 hours to play out. It literally would have taken you 1, 2, 3, 4, 5 hours. 5 hours for the sequence of price to play out. From here, anywhere up until here, when you're forced out of your position. So it wasn't very high probability, but it's something, right? And as QT traders, as people that trade signatures and price, we don't trade emotion, we don't trade anything but time and signatures and price and patterns that we add to time. So sometimes you gotta just stick it out, you know. Sometimes you gotta literally wait 5 hours for your trade to plan out. From literally the beginning of close to New York Open, or not New York Open, but closer to the earlier portion of New York, all the way into the end of the PM session. Sometimes you have to do that. If you were really savage and you got in anywhere up here and you held and you were able to hold throughout everything, you would have been holding. Let's say you got in on this candle right here, the 7 a.m. You would have been holding You would have been holding for 1, 2, 3, 4, 5, 6, almost 7, 6, anywhere for 6 to 8 hours for your trade to plan out. So sometimes you got to stomach it, man. You know, we have to be patient. We have to let our trades play out and trust the process, right? So this is me just going through every single day, pinpointing key points, key areas of interest that we should be looking at in our day-to-day analysis of the market, and seeing, even as shit and as choppy as some of these days play out, there's always opportunity. There's always an opportunity to do something. Even if it's a short little 100 tick scalp, whatever, man, there's always something to do in the markets. You know what I mean? And so that being said, something to note is when price trades into this new week opening gap here, once again, you have a closure inside the new week opening gap. You have an opening. Price trades higher. Whereas here, you don't have the closure and you don't have the opening inside the new week opening gap. In Dow, you have the closure and the opening. And Q do not have it. So once price closes inside of it, opens, you know price is due for a reversal, which it does at 4 p.m. That's a cracking correlation in the way price is trading within trading the new week opening gap. Price opens for Friday, chops around, consolidates. 7 a.m. or the 8 o'clock creates a PSP, which 8 o'clock PSPs are always very high probability. It pretty much breaks past, fills this whole imbalance completely, breaks past it, the trading this basically as a rejection block. Here it doesn't trade into the opening of it, but it just fills the gap, also filling the new day opening gap, filling it, broke past it, while Dow, of course, is doing its own thing, basically, but still trading past it, all that stuff. A couple things to note about this PSP is that it did trade into the relative open and closures. Well, here it did not. Right. of course, with Dow, you have not even pay attention to that because it looks like crazy. But opening closures, the opening of the down close candle will be a rejection block, right? And since this is a PSP, it's gonna have a lot of liquidity as well. And of course, you have the fair value gap. Another way to look at this too is this PSP. Something to note. Breaks lower. Did it create sequential SMT? It did not create sequential SMT. Going into the 9 o'clock candle, we have something to note is we had the closure outside of the new week opening gap, new day opening gap. The closure was outside of it on ES. On NQ, you had the closure inside the new day opening gap. That's something to note. Very important. Very, 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 very important to note. Inside the new day opening gap, you have the closure. Here you do not. Price opens inside the new day opening gap. Price does not open inside the new day opening gap. Trades lower. Basically another breakaway gap. Now going into 9 o'clock. 10 o'clock trades into it. 11 o'clock trades into it. And then proceeds to fall from there. So basically shorts on Friday were very high probability, which I called on Twitter. I called on Twitter during this consolidation phase. Or like even I was early with it. When I tweeted it, I was really early, but I had said that Friday was going to trade lower. Due to the fact that there was the weekly cycle sequential SMT in play. There was also a daily precision candle that we swept. Or daily PSP, or no, it was precision candle that got swept. And so, yeah, there was signs that we were going to see bearish just due to the fact that this was in play. And also due to the fact that there was no counter SMT. We already had a higher time frame sequential SMT in play. We already had a higher time frame key level swept. So there was a perfect indication that we were going to see lower prices. So once we consolidate up, we also have extreme P&D differentials due to the fact that Dow created a very large range going into Friday. We only get about maybe 50%, if that. Here we get just about 60%. Here we get about 50%. So there's a P&D differential between the previous day. And then, yeah, I mean, technically it created weekly cycle sequential SMT here, but it wasn't high probability because once again, I mean, there was closures on Dow. There was a closure here below it, but it didn't close below the entirety of the candle, just closed below the bodies, which is still high probability, but it was already it wasn't strong enough to counter the two-stage sequential, the weekly cycle and the daily cycle that was in play. From the daily cycle here to the weekly cycle, it wasn't enough because this was just a one-stage sequential SMT, right? And so, yeah, Friday we saw lower prices as I guessed, and that's exactly what happened. So, that's all I wanted to review is just the market. Yeah, just market review every day. Try to pick apart, try to see where we could squeeze ourselves into, and hopefully going into next week get into some trades, pass some accounts, and get some payouts. Because that is the plan. That's definitely the plan. So, all right, guys, thanks for paying attention and take care.